ForexDayBreak podcast.
Good morning and welcome to episode 109. Forex pairs in this episode are EURUSD. We see a start of the impulsive structure to downside. Dollar yen. Bank of Japan made an unexpected decision to lower rates to negative territory, and pound dollar also the decline has continued, and we have a trade waiting for the next move down. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Hello and welcome to the show. This is Forex Daybreak Daily Podcast with me, Ville Vainio, and let's go straight to the charts. EURUSD, a 4-hour chart. So last week I didn't make this podcast on Wednesday, Thursday and Friday. I had a little unfinished business, but now I'm back and there has been quite a lot of action last week at the end of the week. So now in EURUSD it seems that this very complex large fourth wave correction has ended. The previous peak is at 109.67. And from that high, we have now seen quite strong decline, and the price action seems bearish in my opinion. And we have a trade also issued here. So sell stop order. The levels are EURUSD sell stop at 108.2, stop loss 108.5, take profit 107.15. So this is the trade for EURUSD today. So we are expecting more downside and a beginning for the -5 impulsive structure. To the downside, we should take this pair first below the previous short-term peak at 107.11, and then after that below 105.2. which is the mid-term low, and even making new long-term lows below 104.6. So expectation is that we are going to see a lot more downside in this pair, a lot more euro weakness, dollar strength overall, and this is visible in other pairs as well. So this is quite straightforward. We have maybe first 4 waves soon finished with this small degree impulsive structure. So let's actually draw it here. So from 109.67 we maybe now witnessing the 4th wave of this small degree 5-way sequence, and can expect now a decline and a continuation of this decline, maybe around this support level, which is around 107.7 approximately. And maybe we will see around this level what the price action looks like in a lower time frame charts, maybe 30-minute chart, and make the conclusion if we get a pause here and then a corrective move, one degree larger correction back towards those levels we are now, so 108.4 approximately, and maybe we can close the trade. If we are in the profit, we can close the trade around here, then step back and look if we get a correction around these levels, 108.5, 108.4, and then make a new trade for the next decline. At this moment, it is not absolutely sure if the impulsive decline has begun. Of course, there's a possibility that we haven't yet concluded the -4 correction. But at this point, it's looking quite strong, quite promising that the -5 has started and the very complex correction has found its peak at 109.67. If we get more upside, start to approach 109 levels, of course, we have to make a revision and conclude that the correction is still in force. All right, let's move on to dollar yen. So last week, Bank of Japan lowered their interest rates on a negative territory, and the decision was unexpected. So this caused the yen to weaken across the board. Also in this pair dollar yen, we see the large push, which is around 300 pips to the upside. And now it seems that the upside is continuing. I have no trades in dollar yen. I just wanted to take a quick look that we have made a strong push upwards, and this was expected. I had been advocating that we need more upside to complete the next leg of the triangle. We are now around 61.8% Fibonacci retracement level, a little bit over that. And the price action looks bullish, so there might be more upside, perhaps even to the upper part of the triangle trend line around 120.28. Maybe those levels can be reached, but let's keep an eye on this pair. There is a reversal expected here soon, and we can trade the next leg of the triangle, which will be the last leg of this triangle, and we can possibly trade this to the downside once we see the reversal. This move, of course, would have been nice to catch, but I wasn't trading this pair at the moment. This opportunity went, but there will be others, so no worries there. All right, let's see pound dollar. I have issued a sell stop order here, and the levels are a pound dollar sell stop at 142.2, sell stop 143, take profit 140 flat. Those are the levels for this trade. So here as well, we are expecting a continuation of this large downtrend. We have first 4 waves completed, and the 4th wave triangle has completed now, and the price of the high is 144.13. So 144.13 level in my labeling, the 4th wave triangle has completed. There is a resistance level also in there, so not all the way up to 144.775, where is the termination point of the previous 4th wave, but still quite near, and it found a resistance point on the previous 4th wave lows. This is the line that, let's draw it in blue here. So here the support line, the previous support line now turned into resistance, the upper part of the triangle, and the support line met at this point, and it acted as resistance and concluded the triangle, and then now very strong move to the downside, and expectation that the last 5th wave of this impulsive structure has begun, and we can approximate the 5th wave to be equal in length with the 1st wave, so approximately 430 pips is the 1st wave. So this move here is approximately 430 pips, and we can expect a similar move to be formed here, and our take profit level is about 400 pips from the high of the 4th wave. So at this point 144.13, 400 pips to the downside, we get our take profit level. Let's briefly look Euro Canadian dollar. So here we have also a trade running. This trade was issued last week, And the expectation here is that we have started an impulsive move to the downside. At this point, it is a little bit hard to say what would be the degree of this decline, but at least a 3-wave move to the downside. I have labeled this now as start of a 5-wave impulsive structure, but this can be adjusted later if we get only ABC structure, maybe an X wave. But we can expect a zigzag type if it is a 3-wave structure. So we have a 5-wave structure, the downside from the high of the C wave. So from the peak 161 approximately, we can see a 5-wave structure now has formed to the downside. And then a sharp correction, or what seems to be a sharp correction, and now expectation is that we can expect a 5-wave structure to the downside and towards the 100% Fibonacci expansion level. So even if we get a 3-wave structure, we can expect around 147 level to be reached, and our take profit level is around that level. When we 147.5 is the take profit level for this trade. So let's see how this goes. This was quite nerve-wracking last week, since we get this large, quite volatile sideways price action, but now we have declined and the price action seems bearish, so I'm hopeful about this trade that it will work out. Okay, that's all for today. Subscribe in YouTube to get these videos, and I will see you tomorrow. Bye bye.
ForexDayBreak.com